Welcome, everyone, to today's Explainer. I am so thrilled to have you here as we unpack the really fascinating trajectory of Ducommun Incorporated. If we look at this company through an aerospace metaphor, which is pretty fitting given their industry, Ducommun has been experiencing some absolutely soaring top-line growth. I mean, they are hitting cruising altitudes that most companies only dream of. But, as with any long flight, there's some unexpected turbulence appearing on the radar that we really need to carefully navigate today.
Okay, let's dive right into this. Here is our flight plan. We'll be covering a historic flight plan, record-breaking financials, the Vision 2027 strategy, Wall Street's bullish forecast, turbulence, the restatement probe, and finally, weighing the road ahead.
Section 1. A historic flight plan. To really anchor ourselves, we have to understand what Ducommun actually does. They are a vital player in the complex manufacturing world, specializing in two core areas: electronic systems and structural systems. They produce highly complex, mission-critical components for commercial aerospace, defense, space programs, and sophisticated industrial markets. Basically, if it's flying in the sky or operating in a high-stakes environment, there is a very good chance Ducommun's engineering is tucked away inside it.
But here is a fact that absolutely blew my mind. The company was founded in 1849. Yes, 1849. That literally makes Ducommun the oldest continuously operating company in the entire state of California. They recently celebrated their 176th anniversary. And you just don't survive that long without knowing how to adapt, evolve, and execute.
Section 2. Record-breaking financials. Let's look at the hard data to see exactly why this company is currently flying at cruising altitude. In the first quarter of 2026, Ducommun posted net revenues of $209 million. That is a solid 9% jump year over year compared to the $191.7 million they posted in Q1 2025. But more importantly, that $209 million figure isn't just a bump. It's literally an all-time record for the company. Now, what's really interesting is when we look beneath that top-line revenue. The metrics are incredibly strong. Net income came in at $9.9 million, which is a staggering 607% increase year over year. Meanwhile, gross margins expanded by 70 basis points, or just under 1%, reaching 26.9%. And adjusted EBITDA grew 19% to $35.4 million. They aren't just selling more, they're operating way more profitably. And they have incredible visibility into their future revenue. Ducommun has a massive total backlog sitting at $1.2 billion. Breaking that down, military and space makes up 59% of the backlog, while commercial aerospace comes in at 40%. Those are the dual engines driving the company forward right now. Their defense portfolio is seeing strong demand across missile platforms, and commercial aerospace is rebounding beautifully. Section 3, the Vision 2027 strategy. This kind of growth definitely isn't an accident. It's the direct result of management's Vision 2027 game plan, which launched back in early 2023. It revolves around a few key strategic shifts. First, they focused heavily on increasing engineered products and aftermarket content, pushing that up to 23% of revenue. Second, they executed an aggressive offload strategy, basically partnering up with defense primes to secure positions on multi-year priority missile programs. And third, they actively consolidated their manufacturing footprint to drive some massive cost savings. The tangible results of that strategy are super impressive. By completing their restructuring program and closing facilities in Monrovia, California and Berryville, Arkansas, they locked in an anticipated $11 to $13 million in annualized cost savings. And the industry is definitely taking note. They were awarded the Vertical Launch Systems Supplier of the Year by BAE Systems, and Time magazine even named them one of the best mid-sized companies of 2025, praising their blend of strong financials and operational excellence. Section 4. Wall Street's bullish forecast. Let's see what the market thinks of this flight path. Analysts are heavily praising the company's operational efficiencies. As one recent analyst report noted, Ducommun Inc. has demonstrated a positive financial trajectory. Overall, the company's consolidated adjusted operating margin improved by 200 basis points year over year. The experts point specifically to that favorable product mix and the consolidation efforts we just discussed as the main drivers. Because of those strong fundamentals, the consensus among analysts is overwhelmingly positive. A full 80% of analysts rating the stock have given it a strong buy recommendation, with the remaining 20% rating it a buy. That means there are currently 0 hold and 0 sell ratings. This optimism is fully reflected in their price targets.
The Wall Street consensus price target currently sits at $162 per share. Based on recent trading levels around $148, that represents a projected upside of about 9.4%. Clearly, the financial community sees a long runway for continued growth. So, the crucial point is that while the financial momentum is undeniable, there is a developing situation that requires our objective attention. Section 5. Turbulence, the restatement probe. According to recent reports from Simply Wall Street, Ducommun is currently facing an accounting probe that investors really need to be aware of. The investigation centers around adjustments to stock-based compensation and has raised questions regarding potential weaknesses in the company's internal controls. Furthermore, the report notes that there has been recent insider selling observed over the past 3 months. While the stock has shown short-term strength despite this news, analysts warn that investors must use this as a signal to rigorously reassess the governance quality and how much weight they place on historical financials until the probe is officially resolved. Section 6. Weighing the road ahead. Let's pull all of this together. And this brilliantly illustrates the current duality of Ducommun. On one side, you have undeniable tailwinds. Simply Wall Street estimates the shares might be nearly 25% undervalued. The company just posted a record-breaking $209 million Q1 with a massive $1.2 billion backlog. And Wall Street maintains a unanimous buy or strong buy consensus. But on the flip side, you have those governance headwinds, the restatement probe, the reassessment of internal controls, and the recent insider selling activity. It is a classic clash of stellar operational execution meeting government's uncertainty. Which leaves us with this final critical question. Is Ducommun's balance sheet and core business strong enough to weather this regulatory turbulence? Moving forward, it's going to be absolutely vital to closely monitor their upcoming SEC filings to see the exact size of any compensation adjustments and evaluate management's remediation plans. Thank you so much for joining me on this explainer today. Keep learning, keep analyzing, and I'll see you next time.